Hey, it's Friday, and today I have a special guest. I have Esther Phillips with Key Mortgage. She is the Senior Vice President, and I thought we could get a little bit of insight into the mortgage process. And not only is Esther a rock star at what she does, she is also who my family uses and my friends. So I cannot recommend her enough. So first question is, Esther, can you tell us the difference between a pre-approval and a pre-qualification?
I would love to. And by the way, that's the best compliment anyone could give me, is that they love me for their family and friends. So thank you very much. But to get to your question, what is the difference between a pre-approval and a pre-qualification? The short answer is nothing. And the reason I say that is because they are just words that are interchanged to essentially do the same activity. It may connotate a little bit of a deeper look, but essentially what that means is that there's anywhere between a brief conversation to a full review of documentation and the use of automated underwriting to determine whether or not you could be approved for a mortgage loan. And it's extremely important in this market right now to have that more intense, deeper look to ensure that when you do go to make the offer, your offer is going to be rock solid and ensured that you're going to be able to close on that loan that you thought you were going to get in the beginning.
Yeah, it is really important to have the buyers like fully at the best advantage when they go to make an offer.
Absolutely.
So, what kind of documentation do buyers need when they go to get a pre-approval?
So the level of documentation can differ based on what the complexity of the individual borrower is. It could be as simple as a pay stub and a W-2 and a bank statement. To someone who is self-employed with multiple companies, it could be a little bit of a deeper look into their financial history and the financial history of the business. But it's really important that regardless of where your situation is that you do provide as much documentation as possible, because ultimately that information will have to get reviewed. And it's so much better to have it reviewed up front to identify any situations that may come up that we could address even before you get into a contract situation.
And that leads me to my next question is, what's the difference between working with you at Key Mortgage as opposed to just going online to like a Quicken and getting a pre-approval?
Exactly. Well, they've done a great job of advertising the ease of their system and use. And to that aspect, they're absolutely right. You could do it at 2 o'clock in the morning and provide your information and print out a piece of paper. The difference is that it's missing that consultative piece. I always say loans are like snowflakes. Not every single one is the same. Mm-hmm. And so while it's great to collect the information and be able to be provided an instant, we're all about instant gratification, you can instantly be approved, mm-hmm. that actually may not be the right loan for you.
Yeah. And
so we at Key utilize the same technology to grab that information from you, so you could apply with me online at 2 o'clock in the morning, mm-hmm. It will pull down your bank statements, it could even go and get your pay stubs for you. But the mm-hmm. difference is that when you're done, I'm going to schedule a phone call with you, and we're going to go through that information, and then I'm going to provide you options that you can utilize then that are based on what is important to you, whether it's keeping your payment at a certain level, the amount of money that you have to work with, mm-hmm. or a certain sales price that you're trying to get into.
Yeah,
so that to me is the big difference between the two.
Yeah. Could you give us just a snapshot into what is happening with mortgage rates right now?
So mortgage rates are pretty volatile right now, but I'm going to frame it under the guise that they're still incredibly low. Mm-hmm. On a historical basis. Anything really under about 4.5% or 5% historically is great. Rates have been held artificially low, and I say artificially because the federal government, the Fed, has been buying mortgage-backed securities, which is really what pegs interest rates, mm-hmm. on purpose, right, during this pandemic, during the economic slowdown, to keep the economy chugging along sure. as much as it can. Well, fortunately, a lot of very good socially economic news is now causing the Fed to maybe take the brakes off a little bit, mm-hmm. and we're seeing a lot of volatility because investors really don't know what to make of that. Yeah. And so when I say volatility, maybe 1/8 or 1/4% over a week we'll see up and down. Okay. The good news is they are still incredibly low. Usually about 3.25, somewhere around there, maybe even dipping below 3 on some good days. Mm-hmm. And it's really about that 1/4% is maybe only $40 or $50 a month in your payment. Okay. So it shouldn't preclude anybody from actually going out and wanting to buy a home that wants to buy a home now. Mm-hmm. But if you're waiting for the market to get better and rates to come down, that's one thing I would probably suggest not to peg.
Yeah. Okay. That's good advice. Well, thank you so much. As I said, you are not only a great partner for my buyers who are looking for solid financing, but Just a great person to work with, and
Thank you very
really good
much.
at what you do. So
Thank
thanks for
you.
joining us.
You're
And
welcome.
I will put all of Esther's information in the message below, so you can reach out to her if you have any questions. Have a great weekend, everyone.
Thank you.
Cheers.
Bye-bye.